Before we begin, let us introduce the ASEAN+3 region with a brief background. ASEAN+3, as the name suggests, is a cooperation that includes the 10 ASEAN countries, with the inclusion of 3 more: China, Japan, and South Korea. So, where did they come from? Why have a +3? Well, the Asian financial crisis in 1997 highlighted the importance of having this summit of 13 nations. After the crisis, it became apparent that ASEAN had to attain financial assistance from external partners. This is where China, Japan, and South Korea come in, forming the +3. The framework initially focused it on economic cooperation, but have expanded into field of politics, security, and culture. The +3 nations are ideas as ASEAN strategic partners because they are quite close geographically and culturally, have the financial and economic capacity to provide the necessary assistance, and finally, they are interested in developing successful cooperation with ASEAN. Now, our topic of interest is the pursuit of monetary integration in ASEAN +3. So, what is monetary integration? A monetary currency union, or simply a monetary union, is defined as at least 2 states or countries sharing a common currency among them. Economic and monetary union represents a major step in the integration of economy. It is important to point out that the relationship among member states in a monetary currency union are deepest when they share a common currency, a single market, and a custom union. So, now that we know what monetary integration is, how do we go about conducting one? One method put forward, which is being discussed among ASEAN +3 leaders, politicians, and academics, is the introduction of the RMU, or the Regional Monetary Unit. The RMU is simply the proposal to introduce a new currency that will initially circulate in parallel with each country's own currency, the baht, the yuan, the ringgit, and will be used at first on an official level. This is exactly like the ECU, the precursor to the euro in Europe. The introduction of RMU could have many uses, all of which work to bring ASEAN +3 closer to a monetary integration and even pave the way to a monetary union or a single currency in the region. Research bodies have identified several major uses of introducing an RMU as a parallel currency in Asia once it has entered its official circulation. Of course, since it is a currency, the RMU also entitles all of the usefulness provided by currency in the traditional sense, such as being a medium of exchange, a storage of value, and a unit of account. However, let us discuss the usefulness of RMU on a level beyond that. Let's focus on uses that are helpful in driving integration in the region. First, since RMU will be made up of a basket of Asian currency, it serves as a useful tool for economic surveillance on a regional level. For example, the RMU can be used as an indicator to show how Asian currencies are moving collectively against external currency such as the US dollar or the euro. The RMU is also an appropriate tool for identifying misalignment and active monetary of an Asian currency via this other regional currency, and it can be used as a divergence indicator. Second, the RMU is useful as a means of payment among member governments for credit transactions among member authorities and as reserve asset. It is also being proposed that ASEAN officials use the RMU as a unit of account for financial reports and budget. This will be beneficial with stable inter-regional exchange rates, even as regional currency as a whole are fluctuating widely against the US dollar. Third, the RMU can also serve as a useful instrument for the introduction of a regional settlement system to link Asian financial markets. This will help to improve efficiency and reduce risk. Another utility of the RMU will be the convergence of the foreign exchange market in ASEAN, with RMU acting as a regional common currency for coordinated exchange rate policy throughout the region. Currently, the exchange rate system practiced in Asia is fairly diverse, ranging from freely floating all the way to crawling peg. The introduction of the RMU would influence member countries to adopt a similar exchange rate regime to achieve inter-regional exchange rate stability by pegging their own currency against the RMU itself. The conversion of exchange rate regime will be another step further in monetary integration in the region. Now that we have talked about the introduction of RMU as a parallel currency, it begs the question, what comes after? If the RMU is being used officially, it is not hard to foresee the private sector eventually adopting the RMU sometime in the future. Most likely starting from private security being issued in RMU denominations. As the RMU become more widely accepted, RMU denominated instruments will experience an increase in liquidity for different maturity along their yield curves. With active trading in variable instrument and maturity, the RMU would have the potential to evolve into a type of currency used in trade. However, there are obstacles in the way towards the goal of the RMU becoming a single currency in the ASEAN+3 region. For example, financial markets in many ASEAN countries are still underdeveloped. Furthermore, different political structures, economic standing, income level, and the fact that each country is pursuing their own domestic goals rather than working together as a region means that ASEAN+3 Union still presents a long-term challenge. The establishment of an Asian Monetary Union, or the AMU, is a political decision that can only be made when a number of political and economic objectives have been fulfilled. Europe witnessed 50 years of market liberalization and economic integration, with about 30 years of debate over a monetary union before the EMU was realized in 1999. So then, let us discuss the pros and cons of a monetary integration in the ASEAN+3 region. Having a common Asian currency would generate substantial political and economic benefits. From a political point of view, the bonding of powers among several countries will give the AMU more clout in a global context. Furthermore, individual AMU member countries will no longer have to feel marginalized by global exchange rate development, but could participate in a common AMU decision-making process. From an economic point of view, the fixing of exchange rates between AMU member countries implies the elimination of exchange rate risk within the club. This will make it easier to live with the exchange rate voluntarily via the dollar or the euro. This is an important argument for Asian countries that have suffered it in the past from the volatility of exchange rate. Moreover, the risk that any single country would try to escape the impacts of a crisis by imposing capital controls would no longer be of significance. In the private sector, an AMU would provide greater support for trade, reduce currency-related hedging costs for companies, and provide support for long-term investment. The introduction of a single currency in Asia would also increase price transparency, fostering competition and growth. Last but not least, it will create a large and liquid integrated financial market for the AMU country, as deeper and better connected financial market would benefit Asia. An AMU will be able to offer broader investment and financial opportunities, such as improving asset to bond markets for financial budget deficit and corporate investments. A major drawback of the AMU is the loss of independent monetary policies, which mean that member countries lose the ability to influence their own inflation rate and absorb economic shocks. This drawback is referred to as the policy trilemma. Besides this, there are other few disadvantages of less significance, such as the loss of income for central banks. So, to conclude, we have discussed about the monetary integration in the ASEAN+3 region, how a single currency might be achieved via the introduction of an RMU, and the impacts that a monetary union could have on the region. One lesson learned in Europe, however, is that the adoption of the euro has been insignificant in promoting sustainable growth. The introduction of a single currency must go hand in hand with further opening of markets and structural reforms. Where we go from here depends on the openness and the transparency of our leader, and the level of cooperation between the members of the ASEAN+3. Right now, we can but only ask, what does the future hold?